crypto absolutely crashed, and in this video I'm going to try and simplify what happened. We're in this together, so let's investigate together as well. Let's start with what changed this month. Spot prices and totals rolled over in the second week of October and kept sliding into today, with Bitcoin printing fresh multi-month lows and majors giving back their rebound. Now Barron's puts Bitcoin down more than 6% today and roughly 17% off its high, with broad crypto weakness alongside sliding US equity futures. Macro set the stage first. Stocks wobbled through the week as bank credit worries resurfaced and global risk appetite thinned. Europe sold off, gold hit records, and indices from London to Frankfurt fell while investors hid in government bonds. Now that risk-off tone bled into crypto late week and today. Now the crypto-specific story since the start of the month. The shock began on October 10 to 11 with a sharp deleveraging. Liquidity vanished, order books thinned, and forced unwinds cascaded across venues. Kaiko's market structure readout describes one of the crypto largest deleveraging events, with more than 500 billion in market cap erased as order book depth collapsed. Now that chain reaction left open interest suppressed even after a brief weekend bounce. Flows confirmed the turn in risk. US spot Bitcoin ETFs swung to net outflows on multiple days this week, removing a key buyer that had supported dips through earlier sell-offs. Farsight's running tally shows negative prints on October 16 across several funds. Now, in a market now dominated by derivatives and ETF-driven liquidity, the absence of steady inflow made the October 10 to 17th slide accelerate. Leverage and liquidations did rest. Futures markets recorded multi-billion liquidations around the October 10 event and aftershocks through the week, with dashboards showing clustered wipeouts across Binance, OKX, Bybit, and others as funding turned and positions were forced closed into thin books. Now that mechanical selling amplified spot moves and pulled altcoins far below their weekly references. Now let's address manipulation claims in Binance with facts separated from rumor, because there have been some rumors about this. Multiple independent sources document venue-specific pricing breakdowns on October 10 and 11th. Now Kaiko flagged pricing frictions centered on Binance and assets linked to USDE during the shock. Now the firm ties the outsized move to order book depth collapsing and venue-specific mechanics, not to a proven scheme coordinated across exchanges. Now if we look at the stablecoin at the center of the chatter, USDE traded as low as roughly 0.65 cents on Binance during the event, while pools on primary DeFi venues held closer to peg. Now postmortems attribute the outlier move on Binance to the way the venue referenced internal order book data and to constrained convert mint redeem pathways during the spike. The Athena founder publicly argued that the venue's Oracle setup and stress deposit withdrawals produced a local dislocation rather than a system-wide failure. Now, a view echoed by several industry analysis. Binance itself has acknowledged technical trouble and abnormal pricing around their window. That exchange published a notice stating that some platforms' modules glitched after 21:18 UTC on October 10th, that several assets experienced depegs after the main market low, and that it would compensate impacted users. Now, follow-up coverage reports reimbursements in the hundreds of millions of dollars. Bloomberg and others cite payouts to customers liquidated during the event. And these are on-record admissions of operational stress and remediation, not proof of an intentional price operation. User reports of failed orders and freezes during the crash are widespread. Now, several outlets compiled complaints that stop losses and market orders didn't fire, that charts froze, and that some users lost session access. Now, these accounts are consistent with a venue under extreme load and with the platform's own statement about module glitches. They're not, on their face, evidence of spoofing or wash trades directed by the exchange. And to differentiate what manipulation means, classic tactics like spoofing, wash trading, stop hunting, Oracle gaming exist in crypto and have been documented in research and enforcement. Kaiko has chronicled manipulation patterns in DeFi markets. US regulators continue to bring spoofing and fraud cases in digital asset context. Now, these establish that manipulation occurs in pockets, especially where liquidity is thin or oracles are poorly designed. Now, they do not establish that Binance orchestrated the October move across the entire market. Now, before we bridge back to the month's price action. Please keep in mind that I'm not a registered financial advisor and that my videos are always meant to be educational and entertaining only. Always make sure to do your research and to only invest money you're willing to lose. Also, get yourself a hardware wallet. I've put links in the description down below. Be sure to check them out because it would be such a shame if you lost your crypto because you're not doing your self-custody. Right, let's move on. Let's bridge back to the month's price action. Macro jitters knocked risk appetite lower. ETF demand stalled. Books were shallow heading into October 10th. Now, a venue-specific pricing failure in USDE and concurrent exchange stress poured gasoline on the fire, triggering forced unwinds across majors, with altcoins hit the hardest. The prices then slipped further this week as equity weakness and bank credit worries kept the bid soft, leaving Bitcoin and large caps at multi-week lows in today's session. And to add what is fair to say and what is not, in the fairness, Binance suffered a visible outage and dislocations. It has confirmed glitches and compensation. What's also fair is that USDE's steep print was worst on Binance, tied to venue mechanics during a liquidity vacuum. What's also fair is that leverage and thin depth made the shock larger than the macro headline alone. And what's not fair without its proof is claims that Binance intentionally engineered the crash or profited via a coordinated manipulation. No regulator or forensic team has published evidence of this month's event. Now, for those of you who are wondering if this is a buying opportunity, it all depends on time horizon and conviction. Historically, deep corrections in crypto have reset valuations to more reasonable levels, but timing those resets is very difficult. If rates start to ease next year or inflation finally stabilizes, liquidity will return and crypto will likely recover faster than traditional markets because it moves with sentiment rather than earnings. The whole problem is, if you have an altcoin that has dropped 50% or maybe even 80%, then how big is the chance that it will get back to its previous price level or previous all-time high? I've made a different video about that. I'll be sure to link it at the end of this one. Be sure to check it out. It's a bit old, but it still applies. And what's happening now is a reflection of macro pressure meeting speculative excess. Every cycle strips away the noise and leaves only the assets and projects that can survive tighter conditions. Once the process finishes, capital tends to return, but only when the broader economic picture supports risk-taking again. Now, for now, the story is simple. Liquidity is expensive, confidence is fragile, and everyone's waiting for the next signal from central banks. And one thing that's important as well is holidays like Thanksgiving, Black Friday, Cyber Monday. We've got Christmas coming up. We've got tax events in December where people will trade their crypto for a tax advantage or for some write-offs, so that they don't have to pay as much tax. We saw it happen last year. I think it's going to happen this year again. Another thing I think is a huge factor are the tariffs on China. If they remain intact, I think the price will not go up very much. I think that when Trump decides to lower the tariffs, we will see a nice increase of the price again. You can quote me on that. Like I said, I'm not a financial registered advisor, but I think that will definitely have a very big factor on the price as well. All right, let me know your thoughts. Thank you for watching and I'll see you next time. Doei.